Shannon from alphatrends.net. Today is Friday, the 12th of March, 2021. Hope you had a good week in the market. Let's take a look at these numbers. They were pretty impressive. Nice bounce back, and the S&P is at a new all-time high. NASDAQ still underperforming year to date, being dragged down a lot by the semiconductors recently. The big winner this week was the Russell 2000, up 7.4%. Just an amazing move there. I'll show you some stocks that I was looking at and posted to Twitter that were up on an average of 9% off of 12 stocks. But let's take a look at the S&P 500. As we know, this volume-weighted average price from the November peak has been just spot on where the buyers have been found on numerous occasions here, and I've been pointing this out for the last 3 months or so. I was surprised to see once again it was exactly the lows, and that we were able to bounce to new all-time highs after testing that level once again. But this is why we have that on our chart. We briefly were below the 20 and the 50-day moving average, but they continued to rally. So buyers remain in control. For next week, what we want to see is that we continue to hold above that rising 5-day moving average. It was nice to see we got through this resistance today. It was yesterday. It was tested and held today. So buyers are in control of the S&P 500. Now the NASDAQ's a little bit different story. Not quite as enthusiastic on the bounce back. We did see that the measured move, which we spoke about prior to the event, was the exact low, and that was also the volume weighted average price off the September peak and off of the September low. So right now this market's a little trickier because you can see we've got the declining 20-day moving average and the declining year-to-date volume weighted average price, which the market was not able to get back up through again this week. Now tech is underperforming. If you think that tech is going to outperform and you want leverage on it, a great way to look at it is through the RecShares microsectors. They have FNGU, which is a triple long FANG exposure. Or if you think they're done, FNGD for triple short. There's for sophisticated investors, of course, and thank you to MicroShares for being the sponsor of this Free Friday video. Back to the NASDAQ, looking at a 30-minute time frame, there's our volume-weighted average price off the peak. You can see that continues to be an obstacle. We did get above it today and close above it, so that's one good sign. We also closed above this trend line. A trend line break means the rate of descent has slowed, but now that we have a rising 5-day moving average, I think we can look for the NASDAQ maybe to start catching up a little bit. Of course, the first level that we really need to get back above and hold above is 320. If it can do something like this next week, where maybe it comes down, pulls back, and then gets going, that would be a real nice way to see this market set up. So going into next week, I think as long as the Qs can hold up basically about 309.5, I think the buyers have the opportunity to push it back higher again. Just a little bit of concern though, because that 20-day moving average is declining and the year-to-date volume weighted average price is declining. Once we can get through this peak right here though, I think that clearly puts the buyers back in control of the NASDAQ 100. The Russell 2000 is again where the biggest winners were found this week. And if you looked at my Twitter on Sunday, I had posted a chart 12 charts of stocks where I was saying, the point was that you don't have to buy dips and do stupid things with your money to make money in the market. These were 12 setups that I had posted that looked good for gains, and here's what happened. On average, they made 9%. Angie was up 8.27%. Dropbox up 15%. Just some really nice winners there this week, and the fact is you don't have to buy these stocks that are plunging trying to look for the low. If you look at Amazon, for instance, it's under distribution. We've got a declining 20 and 50-day moving average. It's below the year-to-date volume weighted average price. Prior support is starting to potentially act as resistance. Why buy the ones that are going down because you recognize the name rather than look for the low risk, high probability setup? That's what I do every single day at alphatrends.net for subscribers. We got into Boeing 3 days ago, and that's been a monster move. Now, funny thing is, I didn't even buy this stock. I had gotten subscribers into it right here on Wednesday, and just a real powerful 3-day move there. So not everyone catches them all the time. I certainly don't. But the fact is, there's still a lot of opportunity in this market, and I look through thousands of charts to find the winners. Semiconductors still, as noted, underperforming a little bit. I do think that this was probably the low for this sell-off, though, and now we've got a similar situation as the NASDAQ in that we hit the measured move objective on the downside, and now we have this year-to-date volume-weighted average price and declining 20-day moving average ahead of us. So I think that it's, if it can get back above and hold above 236 or so, you're likely to see follow through on the upside, but it might not be as vigorous as it had been on these prior moves. I think maybe now it's time to really just, let this semiconductors slow down a little bit, absorb these giant gains that they've had over the last year and a half, and then perhaps they can reset up in a low risk, high probability way. The biotechs, as we noted, also hit its measured move objective on the downside, hit that 200-day moving average as well, and that was the absolute low 1 week ago today. And now we're getting a bounce, and we have to see, so far it's progressing nicely. If we can continue to hold above the volume weighted average price from the low, I think that, it's likely to see maybe some flush outs and then, continue higher, something like that. So if you're looking to get biotech exposure, don't be chasing these gaps higher by any means, but instead look for the low risk, high probability setups. Financials continue to be the giants for this year. They broke that resistance and they just will not slow down. So if you're involved in those, that's great. I personally don't like trading the financials because they gap pretty much every single day, and they're generally a boring group, but not this year. So you go what you're comfortable with. No one should be trading everything exactly the same way. I always encourage people, make the trade your own. If I show you a setup and it works, that's great. But if you miss it, so what? I missed Boeing, and Boeing was a really nice mover this week percentage-wise. I don't know what went, but we got involved at 224, and here it is at 269. And I say we, meaning Alpha Trend subscribers, but the point is there's a lot of opportunity out there in this market, but it's not going to be in things like gold, which are in a downtrend, or silver, which are starting to enter a downtrend. You want to look at big momentum movers, and not buy them as they break out, but after a pullback, and then they begin to rally once again. So again, hope you had a good week, and thanks for tuning in.